Good afternoon, everyone, and thank you very much for joining me. This is the NFP Live Trade with FXCM. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM. My email address is r@fxcm.com, and today is Friday, the 5th of November, 2021. I'm just going to bring up some disclaimers. Here's our high-risk investment warning. I just want to keep this on screen for a few moments. And here is our market commentaries disclaimer. And just finally, the sources we'll be using. So we'll do the trade on market scope. We will be looking at TradingView because I'm using a live FXCM account as an employee. I don't get the FXCM US dollar instrument. So I just want to have this up just in case. And then we'll use Forex Factory just to get the data in. Let's go ahead and bring up the chart. So we'll trade Euro US dollar. It's the most widely traded currency pair. What we have here is we've got the 15-minute and the 1 minute. We'll be looking predominantly at the 1 minute during the trade. And then the hourly also serves a purpose because we can just see where the pivot areas are. These pivot areas usually come into play, so we'll just keep an eye on that. And we've got 7 minutes, and then we'll get the non-farm payroll release. Just want to go back to our calendar, and we have a forecast here of 455,000 jobs that were created in October. We've got an unemployment rate expected of 4.7. I think the unemployment rate here is the least important. It's actually a lagging indicator, but we want to really see the job creation, because if I bring up the histogram here, okay, let me just zoom in. Okay, you can see that the last two prints have actually missed. See, that's the forecast for September. Well, that's the forecast for the non-farm payroll coming out on the first Friday of September, was reflecting job creation in August. And this was the last one. So we've got this job creation, but it's at a declining rate. And given that the Fed is pushing back on interest rate hikes, they've gone ahead and announced the tapering, but rate hikes, they're just urging patience. So we just want to see this, I guess, the skyline, and then we want to try and interpret it in terms of interest rates, because I think that's the way the market's going to interpret it after the initial volatility. All right, so let's just close this up. The other metric to keep an eye on is average hourly earnings. So inflation is an issue at the moment in the States. Not just the States, globally, inflation is starting to show itself. The common the common hypothesis is it's transitory in nature. In other words, it's only temporary. Once those supply chains effectively come back online, it should bring in enough quantity so that the excess disappears. Let's just close that as well. In terms of how we're going to approach the trade, we're not going to put on a position before the announcement. We're going to put it on after the announcement, and it's going to be as follows. I'll just bring up my Microsoft Paint here. Either the first move is going to be incredibly strong upwards. Okay, in other words, that would be euro appreciating against US dollar. So some of the news that's been released is dollar weakness, or it's going to be moving down where euro is depreciating, it's devaluing against the US dollar. That would be if we have a news release that suggests, in my opinion, that interest rates are going to have to be considered. Now, we're not going to trade these impulses. What we're going to do is we're going to wait for the pullback either to the downside if the initial impulse is up, or to the upside if the initial impulse is down, and then we're going to attempt to get in on the next leg. So that's the way we're going to approach it, and then we're going to use what we call reference candles, which I'll show you when we are in the trade. We'll use reference candles to try and get in. We won't get the absolute low, but we want to try and get in as close to the sort of end of the correction as possible. It's a very volatile time in the market. Sometimes we only get in there, but it doesn't mean that the legs finish. So we may get something there. In terms of risk management, 20 pips. Okay. That's going to be the stop loss, and we're going to have a 20 pips take profit. So it's effectively a 1-for-1. But what we're going to do is we're going to trail the stop loss as permitted. Okay, so if we can get that 20 pips risk out, we will count that as a success. All right, if there's any questions, please go ahead and type those through. Any questions, please go ahead, type those through. I'm going to pop this down, and I'm going to bring up the chart. Okay, so we're looking at the 1 minute. Here's the top pivot, and just squeeze this down. There's the bottom pivot. Okay, so let's go back to the 1 minute. Now, in terms of time, well, we've got 57 seconds. We'll get the release, 57 seconds, and we should see some reaction in the market. All right, and just to show you, this is a countdown. So because we're on the minute, it counts down every 60 seconds, and then we'll get a new candle. Sometimes I'll go silent because I'm trying to trying to figure out what's going on, but I'm still here. All right, so another 25 seconds. So there's a little bit of positioning going on just before. You can see that. So we'll get it in another 15 seconds. About 5 seconds. All right, so at the moment, there we go. Okay, so there's the volatility. Initial impulse down, strong dollar reaction there, and we'll see if we can get some sort of indication of exactly what's come out. And I'm just going to go ahead there and bring this up over here. There's so much traffic on the site right now that it may take some time. All right, let's just click there. All right, just while that's trying to work itself out, let's go back to the price chart. All right, so the reaction is still in the dollar's favor. So we must have a fairly strong release here. All right, so you can see we've beat forecast 531. Unemployment's come down. The average hourly earnings is pretty much on forecast. Now, I think the market's pretty excited about this this release here. If we bring up the histogram just to see if they've got it in. You can see that it's beating forecast for the first time in 2 months. All right, let's go back and see if we can put on a trade. Okay, how are we doing on the 15K? See how it hits that one, this one. These pivots are defended. All right, let's just take a look here. Okay. So we're looking for what's called a reference candle, just which is effectively a swing high. Okay, that's what we're looking for. So a swing high, something like this. Okay, this type of pattern. That's what we're looking for. So at the moment, we don't have it. In other words, what I'm looking for is a candlestick that shows the highest high in at least 3 candles. Okay, so that's our mechanism to try and catch the momentum here, and we just need price to move above here. Okay. Okay, so we've got now, we've got a high. We need it to be in at least 3 candles. So here's candle 1, candle 2. So we're just going to wait for the next candle. I'm going to move this down here, and we're going to try and massage our entry, and we're going to try and get as close to the top as possible. Okay, so we've got another reference candle. We're going to just pop it up there. So this now has become the highest high. Another 24 seconds on this candle. Another metric, not metric, it's not the right word. I want you guys to keep an eye on this stochastic as well. Ultimately, if we want a short to work out, the stochastic's got to hit the 20 level and hold there. If it doesn't do that, we won't have a successful trade. Okay. Just seeing if this high is taken out here, because that will give us a new reference candle. Yeah, there we go. Okay. So we're going to just extend this to this point here, and that will give us a better entry, assuming short is the way to go. But again, we've only got now 2 candles, 1, 2, so we have to wait for the third. Okay, 6 seconds, we'll get the next candle, and we want to see if it closes. We want to see if it closes below the reference candle's low. Let's just take a look at the 15-minute, and there's this huge bounce off of the S1. Okay, so going back, let's just see the pullback here. Okay. So we've got 37 seconds here. This candle at the moment is an interesting candle. It hasn't taken out the previous candle's high, it hasn't taken out the previous candle's low. We're very close to the tick here, but it could be an inside candle. In other words, the whoever's pushed this leg up may be losing, or may be becoming uncertain. Let's just keep an eye on our third condition, which is we've got condition 1, we want a highest high. Condition 2 must take up the reference candle's low, and then we need a close below it. Without those, we're not getting a reversal because there's no swing high. If there's no swing high, well, then we're on the wrong side. I need to take a look and see if perhaps the pullback is to the downside. Yeah, it's 9 minutes after the announcement. Okay, we'll get another candle in the next 3 seconds. Now I just want to see where this candle closes. If it closes below our green horizontal here, I'll put on a position. I'll put a position on. It's not the greatest because there's a big buying total here, but let's do it. Okay, there's the 20 pip stop. Okay, there's the 20 pip stop. There's the 20 pip take profit. We want to get this stop loss down as quickly as possible. Just want to move this out the way. Okay, so here is a reference peak, reference trough, lower peak, and now we're looking to see if we get a lower trough, which we do because the low is lower than that one. So we're going to start moving it down. Okay, so we've taken a significant amount of risk out of this trade now. We started with 20 and we're on just about 8 pips of risk. And then we're going to try and drag it down again. Keep an eye on that stochastic. We need that stochastic to get to 20. Okay, so we cut this down now to just a 3 pip stop loss. So there you can see there's the peak, trough, lower peak, lower trough. Now there's a bit of support that we are betting against. And just keep an eye on that stochastic. Because the bear's having another go at trying to take out that support, but it's been defended pretty well. We've got 3 seconds to, we'll get another candle here. And we'll look to see if we can get another lower peak. If we get another lower peak, lower top, we're going to move the stop loss down again. Okay, 10 seconds, we'll get the next candle. Okay, 10 seconds, we'll get the next candle. And we're looking to see if we get another reference right over here. Another 17 seconds. All right, we're going to drop the stop down a bit more because it's getting pretty close. So we'll make it a break-even trade for now. And this was the last support level that really was defended really well. So this is kind of the challenge. I'm going to drop this down because this could be a contra. Explain that in a moment. Just going to drop this down a bit more. So we've been looking for a swing low. Well, this is a potential, sorry, we've been looking for a swing high. This is a potential swing low. Well, that would put the movement in the wrong direction against us. So I brought the stop down a bit more. It's 22 minutes since the non-farm payroll came out. And you can see the really what's happened here is the volatility is dissipated. You can see we're moving sideways. Let's just see if the bears have the strength to take out this support. Got another 7 seconds here. Well, we're going to just capture a bit more pips here because it looks like the support's being defended. So let's just move that there. Another 5 seconds, we'll get the next candle, and this could be another reference point. Could be a swing, but I'm hoping it's a swing high. Let's just see. It's a bit of a grind going on. Let's just now see if this is a reference candle here. Okay. So now it's hit this, every time it hits the support area, it gets defended. What level is this? This is the sort of 20 to 25 level. If we get a reference candle, I'm going to pull the stop down further. Yeah, let's pull this down, capture a bit more. See, that was close, wasn't it? Another 2 seconds. Look how the volatility has just gone, how we've just moved laterally. So let's see if the bears have another crack at this support. Okay, we're going to pull it down a bit more because that support is fairly well defended at the moment. Okay, so they're the bulls exerting a big one. They're the bears exerting some force. And we're going to get another candlestick now. And there's a gap down here, so I'm going to pull this to the middle of that candle. Okay, keep an eye on that stochastic. Okay, so there's definitely bearish emotion over the last two candles, big red candles down. And let's see if they can finish it off with the third. Got 30 seconds left here. Take a look at that stochastic. It's really weak at the moment, which is good for us. We've got 7 seconds. We'll get the next candlestick. That's a bit slow there. All right. That was a bit slow. I wanted to drag it down. So we've got 16 there, 16.9. So thank you very much for joining me this afternoon for the FXCM live trade. This is a live trade. It's on a live account. So thank you very much. Hope that you found it useful. And we will do the next one in a month's time. So please join me for that. All right. If there's any questions, just type those through. Yeah, there is a recording, Elaine. Thanks, Lisa. I'm going to put this on the Insights, on FXM Insights. I'm also going to put it on our Telegram channel. So probably it's going to take me probably an hour or so, but then take a look at our Insights. It should be there. Thank you very much, guys, and speak to you all soon. Our Telegram is Telegram is similar to WhatsApp. So we've got a Telegram channel. So if you just go through to your Google Play or your Apple App Store, just download Telegram. I'll put my email address. Just email me and I'll send you the address for the Telegram channel. So it's all right. Okay, thanks guys, and speak to you all soon.